Today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment, and basically, in essence, in general summary, I'm expecting the markets to continue on the uptrend. Now, it's a little bit choppy for the time being, but overall uptrend because, like I've stated in the past videos, and I'm going to show the channels, but there's an upward trend support level dating back since 2010. We've bounced off this support level a bunch of times in 2022, 2023, and we bounced off it again essentially in April of 2025. And it looks like the uptrend is still going to continue, relatively speaking, with obviously some down days here and there. But first, I'm going to go over the heavy hitters of the economic calendar, then investor sentiment, then the technicals, then come back for more details for the economic calendar. And I would say the biggest thing to look out for this week from April 28th all the way to May 2nd on the Friday would be the PCE inflation numbers, which the Fed regards these inflation numbers as more accurate versus the CPI and PPI inflation numbers. And that will be on Wednesday, April 30th. The numbers will be coming out at 10 a.m. Versus usually they come out at 8:30 a.m. but this time around 10 a.m. So be on the lookout for that. And there's additional stuff, for example, like GDP numbers, which will be coming out also on Wednesday, April 30th. So I'll get back to the economic calendar stuff, but first, investor sentiment. Kind of interesting. The investor sentiment is getting less bullish still for the time being. The reason why I'm standing a little bit interesting, there is uncertainties at the same time. Be mindful of that. Because, for example, the Fed seems to be relentless to lower interest rates due to potential tariffs affecting inflation. And then right now, during the time frame, we're in the pause of like 90 days of the tariffs for some countries. And then that will potentially cause more issues, or in essence, will cause more issues once we get to that 90-day pause completion date. So there is uncertainties. So it makes sense in terms of investor sentiments to be less bullish because of the uncertainties. But if you look at the technicals, it looks like essentially we are at an uptrend beginning time frame, and I'll get to that soon. But either way, for this week, it's 21.9% bullish versus previous week of 25.4% bullish. So it has dropped, and it is less than the historical average of 37.5% bullish. And then in terms of bearish sentiment, the bearish sentiment at the same time has also decreased. It's at 55.6% versus 56.9% versus the previous week, and is still substantially higher than the historical average at 31%. Then if we look at the technical side, just in case you're a new viewer to this channel, I'm going to just minimize this a little bit. This is the channel dating back since 2010. So it has an upward trend resistance line, upward trend support level, and then upward trend support level for major crashes. So there's only 2 touch points for the time being, but in my opinion, I believe once we get to another major crash, we will get to that support level because there's a moving average that crosses, right about here. So if you go to the alt chart, here's the upward trend support level dating back since 2010 for 2 major crashes. And coincidentally, so far we have the 50-day moving average or the 100-day moving average for the alt chart coinciding this whole entire time with that support level. So in my opinion, if we ever see another major crash, and you always will with cycles, right? But I think the support level will hold. But till then, we got lots of time. I'm not expecting to see that anytime soon with this administration, in my opinion. And that leads me to another thing. I'm not a professional, so please do your own due diligence and research before buying and selling. Just share my thoughts and my opinions. But yeah, and then even though there's an upward trend resistance level, doesn't mean the market's not going up. It was, for example, going up since 2013 to 2015. It's just more encapsulated by that resistance level, and we've seen it encapsulated too again in 2021, 2022. But either way, more to the point, we have bounced off basically the first support level of the lower levels of the crashes kind of thing, hypothetically, and essentially is going up. So if we look at the 1-year chart where we're currently at, MACD line here is indicating for a bearish or bullish movement. And for the time being, ever since we bounced off the support level, we are in a bullish movement right now. And then you could argue it could be short-lived soon because obviously there will be more down days to come. It's not just like, for example, today's a down day, right? Right now I'm looking at specifically S&P 500 or SPY ETF for the S&P 500. Same thing, just different ratio, right? And currently it's at $547. Right now at the time being down 0.6%. So there will still be down days, but the trend overall is to the upside, it looks like, for the time being. So I would assume more up days versus down days with the way we're going. Now, for the 5-year chart, this is more of the reason why I think the uptrend is coming. Now you can see it's a little bit flat with the MACD line, but it's in the bearish movement, but more so getting arched to the upside for the time being, it looks like. and again bounced off the support level. With the alt chart, you could argue more downside is coming, but I think this will be short-lived. We've seen times that it's been short-lived regardless of all angles. For example, right about here in October 2023, it looked like it was going to cross over to a bearish movement. Now it might have, with the data point, sometimes they do cross over to a bearish movement and then convert back to the bullish movement. But if it's a small data point, it doesn't even show it in the graph. Now this one is a larger data point, so it is being shown in the graph, but at the same time, we could get quick reversals. But that's just my opinion. I think some of these, because they're, for example, if you've been paying attention to some of the news, there's been some talks that the China tariffs with the U.S. could be resolved soon. Now, they are just rumors, but I've noticed in the past few months, a lot of these rumors end up coming to fruition. And if they do come to fruition, the market reacts substantially into the positive side. So for the time being, just keep your ears on the road, on the ground kind of thing, and see what's happening potentially. And some of these do bear fruit, so be careful of that in case if, for example, you're shorting the market, right? Now, it depends though. If you swing trade, it more so pay attention to the rumors. If you day trade, you could pay attention to rumors, but it might not affect you so much. It could if they come out obviously within the day, but you have to assess on how your trading style is, right? Now, for looking at ETF QQQ, showing the exact same thing. This is why, in essence, I gave that summary in the beginning, is because all the markets are basically showing the exact same thing. So I'm looking at ETF QQQ, ETF for NASDAQ. If you look at the 1 year chart, NASDAQ, by the way, has the same channel, essentially dating back to 2010, upward trend resistant, upward trend support, did break through, but came back underneath, all stuff, had issues passing a bunch of times, etc., false breakouts. And then we were in the mid zone somewhat and then bounced back up. But if you look at the 1 year chart, MAC line, bullish movement as well. Obviously, we could be hypothetically heading down from this run up, but the bearish movement for the 5 year chart essentially looks like it's going to cross over the bullish movement at one point. There is some headwinds. I should have probably covered them a little bit. Like, for example, the 50-day moving average for the 5 year chart obviously will cause headwinds. Right now, $467 for QQQ ETF, and then the 50-day moving average will be about $488. So you expect some headwinds at $488 for ETF QQQ, right? And then in case you're looking at SPY, just to double check, SPY headwinds, you're looking at $567. Right now we're at $547. So $567, you can expect some headwinds right there. Again, there will be down days. I'm not saying that there won't be, but I think overall we've started our trend to the upside for the time being, given the past movements, right? And then for QQQ, just a continuation, just to show the alt chart, just to visually show. For the alt chart, we are in the bearish movement as well. But I think, again, just like the S&P, I think this is essentially going to be short-lived and start heading up to the upside. And then for the Dow Jones, which is the exact same thing, right about here, 1 year chart, bullish movement. You could argue short-lived, but there has been support levels we bounced off of. 5 year chart, essentially going up to the upside as well. And then you could argue resistance. Basically, I'm expecting, for example, in the Dow Jones, right now we're at 40,080 points. There's an upward trend resistance level dating back since 2021 of November, give or take. And you can see clearly resistance all the way through, acted as support a couple times, and plus mixed in with the 50-day moving average. So either this level will cause this resistance roughly about, give or take, ballpark about 41,400 or 41,400 or 41,500 points, depending on when we meet that line, but then more so for the moving average at 41,700 points, give or take. So I'm expecting resistance at that level for sure, even with the uptrend overall. But then going back to the alt chart for the Dow Jones, it's in the bearish movement right now, but again, short-lived. And more better example, I would say, for the Dow Jones of short-lived is you can see back in October 2023, September 2023, we came down, but then a sharp increase too as well. You can see the candle right there, sharp increase. Let me get this out of the way. Sharp increase. So that downtrend, you could argue we could maybe need another data point for a downtrend. So come back to support levels underneath and then start spiking up. Maybe more so for the 90 days. Once the 90 days tariffs gets eliminated, or whatever happens in terms of progress, and hopefully it's beneficial, then we could see that a steep upside rise overall, right? So again, be on the lookout for potential rumors and assess them to what you think could be happening overall. Does this make sense? Are the rumors most likely going to be true? And then use it to your benefit from that assessment, right? Now, in terms of the economic calendar, more breakdown. On Monday, April 28th, nothing scheduled. For Tuesday, April 29th, we have Advanced U.S. trade balance in goods for the month of March, Advanced retail inventories, all for the month of March, Advanced wholesale inventories, then S&P Case-Shiller home price index for 20 cities, consumer confidence, and then job openings. Then on Wednesday, April 30th, we have ADP employment, GDP, employment cost index, Chicago business Barometer PMI, consumer spending, then personal income, then the PCE index, the PCE inflation numbers, PCE year over year, core PCE index. I should read some of these numbers actually. So for the PCE index, we have previously 0.3. This time around, they're expecting 0 flat. So they're expecting improvement. Then PCE year over year, previously was 2.5. This time around, they're expecting 2.2. So also a decrease, also improvement for this time around for inflation. Then core PCE index, 0.4 previously, 0.1 this time around. So expecting increase, improvement as well for a decrease. Core PCE year over year, 2.8 previously, 2.5 this time around as well, decrease over. So all the metrics for year over year comparison, core, all that stuff. The core is basically energy removed out of the data point because energy is quite volatile in terms of the calculations and in terms of the prices. So there's that. Then we have pending home sales as well for the month of March. Then Thursday, May 1st, we have initial jobless claims. So be on the lookout for that as well. Previously it was 222,000. This time around, they're expecting 226. So an increase, slight increase. S&P final U.S. manufacturing PMI, ISM Manufacturing, construction spending, auto sales. Then for Friday, May 2nd, for the end of the week, you have U.S. non-farm payrolls, U.S. Unemployment rate, U.S. hourly wages year over year, and then factory orders for the month of March. But that's basically it for today's video. Thanks for watching. I appreciate it. If you found it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And I'll see you guys in the next video. I upload these weekly. Thanks again for watching. Take care. God bless and peace.